Savage Finn Henrik bringing us the good news for the week in this tweet. This is the most bullish recession ever. Could it be because Operation Save Midterms via asset price inflation to boost consumer confidence has begun? Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. Be sure to check out our sponsors, Efani, NordVPN, and Ledger. Protect your cell phone from SIM swapping attacks using Efani's secure mobile services. Protect your data, privacy, and crypto investments by using virtual private network services with NordVPN. And protect your long-term crypto holdings with cold storage hardware wallets provided by Ledger. Check them all out using the links in the description area below. Awesome, let's hit Crypto This Week. This past Wednesday, the Fed makes history with second massive rate hike in as many months. What seemed unfathomable just 6 months ago, a 75 basis point rate hike by the Federal Reserve, has now happened twice in a row. At the conclusion of its July monetary policy making meeting, members of the U.S. Central Bank on Wednesday once again approved a supersized interest rate hike of 0.75 of a percentage point. Members voted unanimously in favor of the aggressive move to tackle white-hot inflation. So basically, the Federal Reserve just moved to make our credit cards, mortgages, and car loans more expensive in hopes we'll spend less and help cool inflation. Interestingly enough, most people are now using credit cards to afford the soaring prices of goods and services. Savage Finn sums up their game plan in this tweet: The Fed, we will reduce demand by making bears homeless. Sheer insanity. And the circus will continue at least until the upcoming midterm elections. The day we had all been waiting for and excitedly anticipating, July 28th, came and went exactly how we expected. GDP fell 0.9% in the second quarter, the second straight decline and a strong recession signal. The U.S. economy contracted for the second straight quarter from April to June, hitting a widely accepted rule of thumb for a recession, the Bureau of Economic Analysis reported Thursday. Finally, recession confirmation, right? Well, our government and entities definitely independent from the government, like the Federal Reserve, hearken otherwise. U.S. Treasury Secretary Yellen says we should avoid a semantic debate over how to define recession. So basically, instead, the White House now says it's only a recession if you see a salamander wearing a top hat. It's definitely one of those do not picture or think about an elephant, and then of course, it's the only thing you can picture and think of. Brilliant. Following this huge week filled with bearish events that were supposed to stress the markets with a confirmed rate hike and a recession that is now identifying as a bull market, why did crypto surge? Well, over $202 million in short Bitcoin and Ethereum positions were liquidated amid bullish move. With Bitcoin and Ethereum enjoying hefty gains after the latest rate hike, traders shorting the leading cryptocurrencies were caught out. So leveraged positions caused a lot of volatility and worked to push prices higher. Is this just another bear market rally before a market crash? Historically, short-term rallies happen most during market crashes. Sven explains more in these tweets. That's the danger with bear markets. Sentiment becomes so bad, positioning so low, and too many people keep shorting at oversold signals, and boom, massive bear market rally rips everyone's head off, and people are forced to cover and chase. That's what's happened since the June lows. First, they don't believe. Then they hate the rally as it becomes the pain trade higher. Then they capitulate and chase higher, get optimistic even, and then the rug gets pulled for the next move down. It's happened many times over, and psychology is a big part of it. So assuming we do have a longer journey to the bottom, will there be more bankruptcy victims in the wake? A big player in the crypto space has been targeted this week. Coinbase is in deep shitecoins, and so is the SEC. Coinbase is in a world of regulatory pain right now. A report this week said the SEC is investigating the company for selling digital assets that should have been registered as securities, a development that triggered a 20% crash in its share price and resulted in a long-time Coinbase booster, Cathie Wood, finally dumping her position. All of this comes only a week after the Justice Department charged a Coinbase manager with insider trading. Bearish. Meanwhile, another major player in the crypto space felt the need to reiterate a message of confidence to the market this week. Tether says it holds zero Chinese commercial paper, denies 85% exposure. Tether reports that its total commercial paper exposure has been cut to $3.7 billion from $30 billion just 1 year ago. In the latest blog post, Tether pointed out that false reports pose the biggest threat to the cryptocurrency industry that currently exists, adding, "It is a threat of the same concern as scams, hacks, or cyber attacks, because the spreading of false information risks not only the reputation of the industry, but also each and every member of the community." A little rich coming from a company that had been blatantly lying for years about being fully backed 1-to-1 dollar per tether. Along similar lines, is it also strange that this week the FDIC urges banks to police misleading crypto claims on deposit insurance? In a new advisory, the FDIC said banks need to make sure any crypto firms they partner with do not overstate the reach of deposit insurance. The push comes as broad turmoil in the crypto market has led to the collapse of some high-profile firms, including one regulators publicly chastised yesterday for overstating deposit insurance coverage. On Thursday, the FDIC and Federal Reserve issued a cease and desist order against now bankrupt crypto firm Voyager Digital, charging the company misled customers to believe funds invested in the brokerage would be guaranteed by the government. Specifically, the FDIC said banks need to make clear to the public that deposit insurance only covers insured banks in case of collapse, and that protection does not extend to the failure of any non-bank partners, which can include crypto custodians, exchanges, and wallet providers. And even if you do have cash in FDIC-insured bank accounts, that doesn't necessarily mean they are safe. This week, hackers drained life savings from 2 women's bank accounts in SIM swapping scam. Online banking is a breeze these days, with many people able to check their accounts straight from their cell phones. So imagine logging in one day and discovering your entire life savings is missing. It happened to New York resident Jackie Berman, who says a hacker wiped out her Citibank savings account that had over $26,000 in it. TV executive Heidi Diamond says the same thing happened to her, with the scammer stealing over $200,000. Citibank has now denied me not once, not twice, not 3 times, but 5 times. Every single time, my heart sinks because I'm thinking, how can they just think I'm going to allow a criminal to have my $26,000, Berman said. The bank does say it has great sympathy for victims of fraud and claims it did everything possible to recover the funds taken from Berman, saying each case is different. Scary. What if I told you that for just $10 to $30 per month, not only could you get 100% guaranteed protection against SIM swapping attacks, but also $5 million worth of insurance coverage to protect you from any financial losses you suffer from a SIM swap? What if I told you I've been mentioning this solution on my channel for about 2 years now? Well, SIM swapping attacks have been on the rise and are getting worse. People have been losing tons of money from SIM swapping attacks. So as a crypto investor, it's especially important to stay vigilant during these crazy times. Efani is a secure mobile phone service that guarantees 100% protection against SIM swapping, as well as fake towers, eavesdropping, location tracking, spam calls, spam texts, and malware. They are based in the United States, and if peace of mind knowing you will never become a victim of a SIM swap isn't amazing enough, if by some crazy chance you do become a victim of a SIM swap, your secure mobile service with Efani comes with $5 million worth of insurance coverage to protect you from any financial losses you experience from a SIM hack. And when you choose to secure your phone and financial assets with Efani, it is typically only about $10 to $30 more per month than your regular cell phone service. All of their plans come with a 100% money-back guarantee for the first 60 days, so there's no risk to you for 2 months if you decide to give them a go. So if you want to check out Efani, scroll down to the description area below and use this link to access their correct and official site, or feel free to use the QR code displayed on the screen. Cool. Let's wrap things up with some bullish news stories for the week. Solana Space's store to bring 100,000 people to Solana per month, says CEO. The new shop entertained about 400 crypto-curious guests on opening day and hopes to host even more as other stores are opened across the US and the rest of the world. And here's a photo of one of Solana Spaces. Nice. So though this may seem cheesy and lame to some people, from a business and marketing perspective, this is an amazing way to spread awareness and drive adoption to the cryptocurrency and blockchain space. So I hope we see more marketing and outreach efforts like this pop up around the world to help us spread the crypto gospel. Because at the end of the day, it's the consumer blockchain that will be a great way for us to achieve financial freedom together. And if you don't believe me, check out another bullish news story proving the consumer blockchain era is among us. Nearly 75% of retailers plan to accept cryptocurrency payments within the next 2 years. From Starbucks to Lamborghinis, consumers are using cryptocurrency to pay for a variety of goods, and retailers are taking notice. Oh man, guys, we are early, but it's coming, fam. Crypto and blockchain are coming. This week, crypto exchange FTX.US opened stock trading to users nationwide. Its president said the company won't be charging trading fees or use a Robinhood-like payment for order flow business model. Sweet. This will drive a lot of people from the traditional stock space to the platform and expose them to crypto, which they will eventually likely adopt. Another win from the traditional financial sector, Schwab's first crypto thematic ETF inaugurates next week. The fifth largest supplier of ETFs, Schwab Asset Management, has over 10 years of experience in overseeing ETFs. And as we've been seeing week after week, month after month, despite the bear market, smart money is investing and building in the space. This week, crypto fund Variant commits $450 million to backing Web3 and DeFi projects. A $150 million seed fund will focus on Web3, and a separate $300 million opportunities fund will double down on portfolio projects. And a big player in the traditional space is helping the cause, bringing his large audience into the crypto space as well, and also securing funding from venture capital firms. A16Z leads $50 million seed round for Gary Vaynerchuk's NFT project. VFriends will use the investment to further build out the NFT character's intellectual property rights. And another huge NFT player in the space is Stacking Cash as well. NFT domains platform Unstoppable raises $65 million Series A at a $1 billion valuation. The company said that users have registered over 2.5 million non-fungible token domains through its platform so far. Cool. So if you haven't secured your very own NFT domain, scroll down to the description area below to access Unstoppable Domain's correct and official site to check them out. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So what did you think about the rate hike and recession definition drama? Are more bankruptcies to come during this bear market? Are you dollar cost averaging or staying on the sidelines for now? Let me know in the comments below. Be safe out there.